Yeah, hello. I'm glad that you make it here. My name is Bakre Ibrahim, and over the past 6 years, I've been into the world of financial market industry, and currently a financial advisor in one of the financial related company, which I'm going to introduce you to later. But let me quickly give you the breakdown of how we are going to build your future plan. Now we are going to use two financial system, and then we are going to combine them, because in this case we are assuming that everybody is independent. That is, everybody has his own source of income. Everybody is welcome. Here, one thing I want to emphasize on is that everybody we want to create a kind of private pension plan. Do you understand? A private pension plan for yourself, which you are going to create by yourself. You see, these two financial system we are talking about is only provided by the company I am working with at the moment, which I'm going to introduce you to them later. So let us get started. Now, here are the two financial system we are going to use. The first one is called annuity annuity. And the second one is called triple pay plan. And we are going to use them combined together. So how does it work? How does it work? You must have heard about annuity, but let me give you a breakdown of what annuity is. Now, let us paint this scenario. People that they are close to retirement at this moment, people that they are working in public sector, civil servants, and people that they are working in private sector that is well organized for uh, for their future life after retirement. There's something we call retirement savings account. A retirement savings account is where they keep, like the names imply, that's where they keep your money for for retirement purpose. Now, this is how it works according to federal government law. From at the regime of former President Olusegun Obasanjo, I think the second term, he brought up something what we call contributory pension scheme, which is CPS. CPS. And now, what this contributory pension scheme, what it means is that you and your employer will be remitting a percentage into your retirement savings account. Do you get it? So now, if you are working in public sector as a civil servant, or you are working in a private sector that is organized for, you know, pension plan, this is how it works. Your employer, in this case, if you are a civil servant, that is the government, and if you are in private sector, your employer, the company you are working with, they will be remitting 10%. And out of your monthly salary, they will be remitting 8% of your monthly salary into that retirement savings account. So that is why they call it contributory pension scheme. That is, your employer and you yourself, you are remitting something into your retirement savings account. So that is how CPS, contributory pension scheme, that is how it works with what we call retirement savings account. So 10%, 8% from you, 10% from the employer, 8% from you, being gathered over the years. As a civil servant, probably you are going to spend 35 years in service. Do you understand? So 18% every month for 35 years. That is what is going to be the bulk sum of money you are going to get when you retire. Now, when you retire, probably at the age of 60, or your 35 years in service is, it has been completed. So when you retire, then the money is now going to be divided into two. Part of it will be paid to you as gratuity, and the remaining part will be, will be getting paid to you as your monthly pension. So that is how it works. Now, this uh, contributory pension scheme and retirement savings account in quote, it is being managed by companies, by financial companies that we call uh, pension fund custodians, PFCs, and they are actually banking system. And we have four banks that they are given license for that in Nigeria. We have First Bank, we have Zenith, we have UBA. Yeah. Before there was Access, but I think Access has been merged to First Bank right now. So these are the PFC, pension fund custodians. Now these PFCs, they are the one that is the banking system that all CPS, contributory pension scheme, that is where they are going according to Nigeria law. Do you understand? According to Nigeria law. So now, when you now retire, the fund for you will now be um, transferred to what we call pension fund administrators. Pension fund administrators. You see, these pension fund administrators, they are all out there like mutual benefit, leadway. Do you get it? They are there. Now, this is what will now happen. When your fund is now being moved to PFA, that is pension fund administrator, the one that your company is using, do you get it? That is where your RSA, your retirement savings account will be with. So now, when you now retire and all your document has been processed and you know you want to start collecting your pension or first even gratuity. Now, so what these PFAs, that is pension fund administrators, what they do is this. What they do is this. According to Nigerian law, you get it? So if you are coming from the angle of PFC to PFA to another level, what we call program withdrawal, that is what pension fund administrator do for you. That is how they are going to be paying your pension to you. So it is called program withdrawal. Now this program withdrawal, one of the demerits is that it can flat out. Yes, it can flat out. You know that they are first of all paid you your gratuity. So let's say everything in your retirement savings account while you're in service is 30 million naira. Okay, good. So they will pay you gratuity out of it. Depending on their calculation, they can pay you up to 40 or 50%. So if they pay you 15 million as gratuity, you are going to be left with 15 million as your pension plan. You get it? So now, they will now calculate, there's a way PFAs, there's a way they do it. You get it? At their own back end system. So with that, they are going to be paying you your monthly pension. But there's a lot of things that goes with this monthly pension. Most especially when it is with PFAs. Do you get it? And you see, these PFAs, they don't want you to understand the concept of annuity, which I'm going to explain later. Because annuity is far, far better than program withdrawal. Now, there's a lot of things that goes with program withdrawal. The first thing is that at these PFAs, your money is being taxed or charged because they are going to, all PFAs remit money to PENCOM. You get it? They remit money to PENCOM. And in every year, what they remit is 7% of your retirement savings account. Yes, every year. So these are one of the charges that goes out of your retirement savings account without the fact that they need to take your consent. They need to take your consent because it's part of the law. So imagine 7% going out of your money every year. So that's one of the reason why your retirement savings account can flat out with pension fund administrators, and as at that time you are going to be left with nothing. And our sincere hope is that you live longer to enjoy your retirement. But there's nothing you are going to enjoy in your retirement if there's no fund for you to be spending, because daily bills has to be paid every time, and you have to survive. No one can actually survive without spending money, either old or young. That's it. It's a fact. Then another thing is this: in when your money is with PFAs, what PFAs will claim is that they are using your money to invest in the financial market industry, like treasury, like bonds. So this is the one issue. They are investing your money as an individual. So when there is fall in the market, and which is most likely to happen, it's going to affect your retirement savings account balance. It's going to affect it. Definitely, for sure, it's going to affect it. So that's another reason why your account balance in your retirement savings account will get flattened out over a period of time, probably within the next 5 years, or that's it. So I hope you remember the first one, the charges that PFAs they pay to Pencom. The second one is the fact that where they are investing your money, which can affect the mark, which can affect your retirement savings account. And there are other hidden charges that they don't want you to know about. So those are the major reasons why your retirement savings account can get flattened out. And don't forget that you are collecting out of it as your monthly pension. So you are collecting out of it every month as your monthly pension. So these three factors, 7% charges every year, the issue of the stock market or wherever they are investing your money, then you collecting out of it as monthly pension. So it's going to zoom out in one day. So peradventure you lived more than that time. So what are you going to survive on? Do you understand? Like, I know that your children are there, even your business is there. If you have a formidable business that you have built, yes, those things are there. But like we always said, that the first thing is to be, first of all, responsible to oneself. If you take care of yourself, you don't even need to wait for children or whoever before you take care of yourself. If children brings, it's just an additional, and it's a blessing from God. So that is it. But the main thing here is to plan for yourself so that you enjoy a very good life after your retirement, which is what you even dream to have. So that is how PFA, that is how it works. But in contrary to annuity, you see, in annuity, you are going to be paid for life. In as much as you are still alive, you will be getting your monthly pension. Do you understand? Another thing is this: what annuity will pay you as monthly pension, it is above what PFAs they will pay you with program withdrawal. That is how it is. At least you'll be expecting, if whatever PFA, whatever they want to be paying you as monthly pension, expect nothing less than 25% increment on it from annuity program. Expect nothing less than 25% increment on what PFA they want to be paying you as your monthly pension. So that is another thing you should know about the benefit of life annuity. Now, another thing is this: you see, what you bring from your retirement savings account, because that is where we are going to pull the fund. You understand? So what you bring from your retirement savings account, in this case, let's say you are a civil servant or you work in a private sector where they have, provided a RSA, retirement savings account, for you over the years. So what you bring from that retirement savings account to life annuity program, Now, let's say the unexpected happens, and we never can tell when our life can be taken by the Almighty. So, peradventure, the policyholder, I don't want to say you in this case, because I always prefer to use a third person to address it. So, let's say the person now pass away, the retiree, he dies. Do you understand? While he is still enjoying his pension, and there is still bulk amount of money left in his retirement savings account, which has been brought to annuity. So what will happen in that case is that Heirs Insurance, they will pay the rest back to the beneficiary of the policyholder, that is the retiree. Probably the wife, if it is in case of the husband, or the children, whoever the retiree has made as his own beneficiary while he wants to undertake the annuity policy. So this thing is done seamlessly, most especially with heirs. It is done seamlessly because everything we are going to be doing is digitized. It is digitized. So even when the beneficiary wants to claim the whatever that is remaining as from their parents' retirement savings account, which has been with us, they can easily they can easily get it through their phone. Do you understand? So, and it will be prepared and it will be paid to them. So that is one of the beauty things about Heirs Insurance, because Heirs Insurance, like I said, is the first digitized insurance company in Nigeria. I think I've even introduced the company to yourself. Okay, before we go on, I would want you to watch an interview of the director of Nigerian Pension Commission, so that you can know that what we are talking about, what we are saying about program withdrawal and life annuity, it is genuine.
What is the difference between annuity and program withdrawal? It keeps confusing people.
Well, it shouldn't confuse people. Program withdrawal is administered by pension fund administrator.
Okay.
It's a system whereby the balance in the retirement savings account of a retiree is spread or programmed over an expected lifespan, so that the PFA will be paying him or her monthly or quarterly pension. And when the person collects the monthly pension, the month one, also there's room for that person to collect a lump sum.
Okay.
The provision is that before you can collect a lump sum, just make provision for monthly pension that will be enough to give you at least 50% of your last salary over the expected lifespan.
Okay.
So if you collect the lump sum, collect pension for month one, then the amount that remains is still in the retirement savings account. The PFA is managing it, and they will keep giving you statement of account.
That's program.
Program, yes. Annuity is administered by a life insurance company registered by NICOM.
Are they also allowed to take lump sum?
Under annuity, you are also allowed to take a lump sum, provided that you meet the condition of 50% of your last pay. But the major difference is that whereas program withdrawal paid over an expected lifespan, annuity pays for life until that person dies. Also, whereas program withdrawal is unitized and they manage it on individual basis, even when it's in the fund, annuity is managed as a pool for all those who have contributed to it. So when you are under annuity, you belong to that pool, and you have transferred the risk of longevity to the life insurance company. While you are still with the PFA, you bear that risk on your own.
Oh, I must say a very big thank you, Mr. Elumelu, for coming on the program. You've been able to educate and inform our viewers. Viewers, that's the much we can take on the program today, and then I'm sure you've been able to grab one or two things from Mr. Elumelu's explanation on how a deceased person can be paid, or how to access the retirement savings account of a deceased employee. On to this week, my name is Princess Rabi.
So another thing that you need to know about program withdrawal is that government even tax your money in your retirement savings account. They tax it. But when it is in life annuity, they don't tax it. So you have access to your money 100%. You are the owner. So it is not being taken by the government in one way or the other, probably through charges or tax, or being affected by the financial market, that is stocks. All those ones are not there. Or even your PFA company, they are not, because they have to say that they are providing you a service and they have to take something out of your money. All those are the demerits. Those are the factors that would make your retirement savings account to get flattened out at a particular point in time. But all those things are not present. They are not there in the life annuity. So you can see the beauty of annuity program for yourself. Now, okay, so we are now, that we are talking about how individual can have their own private pension plan, PPP. So this is how it works. Now you have understood pension, you have understood program withdrawal, and you have understood annuity. So now, under this private pension plan, how are we going to, that you don't work for a company, even if you work for a company, but you want to do this private pension plan for yourself. Now, this is how we are going to generate your own RSA account, that is the retirement savings account. There's another financial system that Heirs Insurance Group, they have, and it is what is called triple pay plan. Triple pay plan. On the norms, this plan is very good in terms of savings and investment, and they call it triple pay plan because it is going to pay you 3 times. It's going to pay you 3 times, whatever the period of the policy that you take, but the minimum is 6 years. So now let's say, I'm just even explaining what triple pay is generally now. So let's say you undertake the triple pay plan for a 6 years plan. Do you get it? So in every 2 years, you can call for fund. So the first 2 years, you can call for fund. The second year, which is the 4th year, you can also call for fund. Then the last fund will now be paid to you in the 6th year, which is the actual time of maturity of your policy. So the first year, that is the first 2 years, they will pay you 25% of it. Same, likewise, the second year, which is the 4th year. And the 6th year, they will pay you the remaining 50% of it. So that's your 100%. Now, so that is how triple pay plan. That is how it works. So now, how are we going to use this triple pay plan as your retirement savings account to generate your retirement savings account? Now, a triple pay plan with Heirs Insurance, like I said, it is only Heirs Insurance Group that has this financial system. Yes. So the basic of that triple pay plan is 6 years. We have 9 years, there's 12 years, there's 15 years. You understand? So there's 18 years, there's 21 years. So now, as we are very young right now, at the age of 30 or whatever the age we are at this moment, so we can use this triple pay plan to generate your retirement savings account for about that 15 to 20 years, just like the way people who are working probably as a civil servant, or people who are working in a private company. They understand. So we can use it to generate. That is the way we are going to generate your own retirement savings account. So now, at the end of the maturity, let's say 15 years or 12 years, whatever the one you applied for. So we will now overturn everything that is in your retirement savings account that we have generated through triple pay plan, we now put it into what we call Annuity Light. You see, this Annuity Light, it is the pension plan for people that does not work in the civil service sector, that is the public sector, or a organized private sector. So every individual as well can be like, okay, they want to create a pension plan for themselves, and Annuity Light is the product that Heirs Insurance Group is giving them. Now, if you don't have, normally your RSA should come from somewhere, that is your retirement savings account balance, that's lump sum, huge sum amount of money should come into your annuity account, that is Annuity Light, to kickstart the policy. So let's say you just want to start it right now. The first criteria is that you must be up to 50 years old. So if someone who is 50 years old, if he wants to do that right now, he can bring a lump sum, if you have it, let's say 30 million, 40 million, whatever. It depends on how much he wants to be enjoying his retirement. That is the pension they will be paying him monthly. But the basic or the minimum is 3 million naira. 3 million naira. That is the basic that you can bring as a large sum into your annuity account. So it is 3 million naira. So now, someone who is 50 years old can still do it as well, because a 50 years old person is still, is still active, is still formidable. So you can still be looking towards next 10 to 15 years. That's around the age of 60 to 65 before you say that you want to be getting your pension. Do you get my point? So such person as well can go for a triple plan of 9 years or 12 years. So with that, we are going to use it to generate his retirement savings account, and after the end of that policy, we will now overturn that money into Annuity Light as a form of retirement savings account. So this is how it works. Yes, this is how it works. Now, let me now introduce you properly to the company. And me as a person, my name is Bakre Ibrahim. Currently, I'm a financial advisor at Heirs Insurance Group. Now, Heirs Insurance Group is the first digitized insurance company in Nigeria. Heirs Insurance is owned by Mr. Tony Elumelu, and Mr. Tony Elumelu is the owner of UBA Bank. So, Heirs Insurance Group is being backed by UBA Bank, and all of us, we know how big and formidable and trustworthy UBA Bank is. So this thing is giving you a kind of sense of security that your fund is protected, your fund is safe with Heirs Insurance Group. They started in 2020, but they actively start the business in 2021 so that they can look at the market very well and see where other insurance companies are, they are lagging behind. One of the issues that all those insurance companies used to have is the aspect of probably a kind of agent not remitting their monthly premium, and so by the time they want to claim, by the time of maturity and they want to have their claim, there will be story here and there. But this is one of the things that Heirs Insurance has cut out, because you are not paying your monthly premium to any agent or anybody. You are paying it directly to the company's account. You get it? So you can do transfer on your mobile phone, and you have every receipt that you have paid. Another thing is this: you are going to have your mobile app where you can be monitoring your policy. You understand? You'll be seeing what is going on with your policy. You see if your money has been remitted or not. In as much as you are the one that even transferred the money to the company's account directly, not a third party, not an agent or a third party. No, you are remitting your money into the account, the company's account, and it's going to be UBA account. This is a very good system for you to plan towards your future self, and you can actually see that it is formidable and it is good, it is seamless. Now, let's say what you are remitting into your retirement savings account, that is triple pay. What you are remitting is, imagine 100,000 naira every month. Now, look at this simple breakdown. Can you see it very well? Can you see the screen? Now, what you are seeing, you can see where I circled. That is going to be your your targeted sum at the end of at the maturity of your triple pay plan. Do you understand? So imagine turning such amount of money into your retirement savings account. It's going to be a very sweet pension plan for you. And don't forget that even if you are not using this triple pay plan for this private pension plan, in this sense, like a retirement savings account, if you just want to go with this triple pay plan on its own, yes, you can actually go for it on its own. And like I said, it will pay you at least 3 times if you call for fund. But if you don't call for fund, your fund is secure and you are just going to be going ahead with your policy. And at the end of at the maturity of your policy, you have your money clean and clear. So I believe that this information has helped you, and I believe that you want to start very now. So if you want to kickstart this policy very now, your private pension plan, you know what to do. Just message me back as soon as possible, and let's get started as quickly as possible. If you are a civil servant that you are even close to retirement, that's good. We can move your RSA account from pension fund administrators PFA. You can move it to annuity with Heirs Insurance Group. So that is another thing. That's another good thing for you. Do you understand? Then if you are someone who has this bulk money and you just want to start immediately with annuity light, everything is welcome. So you know what to do. Just send me a message or give me a call and let us kickstart your policy so that you can enjoy your future self. You can enjoy your future self. That's our priority. That's our priority, and that is what we are actually looking out for you to have. And that is the reason why I bring you this very good information today. So I want to believe that you have understood everything we have said, and you have seen the benefit, and you know how beneficial it's going to be for you. And I will be expecting you to take action very now. I will be expecting you to take action very now. So what are you waiting for? Kickstart your journey towards enjoying your future life. My name is Bakre Ibrahim, and I will be expecting you to, come and kickstart your policy. So even if you are close to retirement, let's say you are a civil servant and you are close to retirement, and you have at least about 6 years remaining, or even 2 years remaining. Now, this is one thing we can do for you, because there is something about getting retired. When you retire today, you are not going to get your gratuity today, and you know that your salary will stop immediately. Now, for example, you are still going to wait for about at least a year or 1.5 years before you can process your gratuity and started getting your pension. So this is what you can do. In as much as you still have few times, before you leave the service, there's another product we have. If you have just about 2 or 3 years remaining, there's a product we have that is called Heirs Save. You can use this Heirs Save. It is 2 years. You can use it to, gather something, before your retirement, so that when you retire, you have something to be spending or to be living on for the next 1 year or 1.5 years before you process your gratuity and started receiving your pension. So if you still have about 5 years or 6 years before retirement, you can use triple pay plan to cater for this thing, so that you'll have gathered something, build something for yourself before retirement just setting like that. I hope you understand. So this is one of the smart plan you can have for yourself before retirement. You have understood the concept of how pensioners are paid, from the retirement savings account through the contributory pension scheme (CPS). From CPS, that is what form the retirement savings account, which is RSA. and it is being gathered by, what they are dropping in your retirement savings account is from two people. The first person is your employer, either the government or the company you are working at. Then 8% from your monthly salary is being sent into your retirement savings account. So that is how they generate the money you are going to be getting as your gratuity and your pension. That's how they generate it. So from CPS, Contributory Pension Scheme, to RSA, this RSA is being managed by pension fund custodians. I've said that earlier. So by the time you are, getting ready for your retirement, this money is being moved to pension fund administrators, like all these. We know all of them out there. They get it. So at PFA, which is pension fund administrators, what they will do for you for your pension plan is what we call program withdrawal, and we have explained everything about program withdrawal. So now we are now going to move. If you want to enjoy annuity, we are going to move that your balance from pension fund administrators. Instead of doing program withdrawal, we now move it to Heirs Insurance for what we call annuity program. And annuity, it pays you for life. Like I have explained, it pays you for life. In as much as you are still existing, you are still living, are going to be paying you. So that is how it works.